Welcome to Pencils Down, a Finalis podcast. This is a show for listeners wanting to learn more about the ins and outs of the private securities brokerage landscape. Each episode will feature insightful conversations with the world's leading investment bankers, placement agents, capital providers, startup CEOs, and more. And with that, let's get into the show. All right, I am thrilled to welcome to the Pencils Down podcast, Michael Grotell with Ithron Advisors. Michael, it is a pleasure to have you on here with us.
My pleasure to be here, Fed. Thank you.
I usually start by asking our guests to share a little bit about their backgrounds and their eventual paths into investment banking, but I think this time I want to try something a little bit different, if it's okay with you, Michael, which is the fact that I couldn't help myself just reviewing your LinkedIn profile earlier today. You express a deep and ongoing interest in history of many different kinds. I think it's perhaps apply the term Renaissance man to you. And I wanted to get into this conversation really by receiving your perspective on some of the things that we've observed over the course of the last several weeks. It really feels like it's been a monumental period in the financial services space as it relates to the collapse of Silicon Valley Bank, Silvergate, Signature Bank, and last week's near-death experiences of Credit Suisse. And, I really just wanted to see if you had any perspective just based on your varied background as it relates to what we've observed over the course of the last several weeks.
Yeah, of course. And actually, I can't believe I still have all of that up on my LinkedIn. I might have to go take a look at that. But,
No, you should keep it on.
I consider myself an advisor, right? Kind of broadly speaking, from corporate strategy and communications, primarily with the M&A focus. I come from an operating corporate development and investor relations background. With Finalis now, I've fully branched into licensed investment banking, private placements. Super exciting, super cool. I actually, I don't. Sometimes I say this, sometimes I don't. But I was supposed to start my career on Wall Street at Bear Stearns in 2008. I had the job, so it was kind of a different life, and I wound up back here. Although obviously I've been playing in finance mostly from the corporate side for a long time. So. I think that the advisor kind of is a generalist. And for me, always bringing in, I was in the advertising industry where, at least, maybe now it's only in the code, but it used to be that linguistics and semantics and aesthetics all played a role in the bottom line. And there was a culture of that there. My academic backgrounds in economics, economic history and art history. And I've always been kind of finding ground in between things. I actually wrote sort of a mini dissertation on postmodern painting and the decline of the gold standard. So I've got all sorts of interconnected perspectives on things. But
I want to dig in on that dissertation topic a little later.
Hopefully I can remember it. But a deal process, right? You're dealing with complex personalities. You're dealing with balancing, all sort of different things as they come up, improvisation. So it's not just 60s jazz. This stuff really kind of applies across the board. So I was kind of getting to this Renaissance man idea, right? I mean, maybe I'm rambling here, but I have some thoughts on that because, the advisor's always been a generalist. And the Renaissance itself was the result of bankers, not of painters. I grew up around Wall Street a little bit. I had some exposure to Lazard. I read Cohan's book a while ago. And, you realize that this kind of eclecticism, Renaissance men, broad interest, that is the role of the advisor. And it goes into, has been a part of this industry, maybe not so much in the last 15, 20 years. And I have ideas on that, but, it's been pretty important for a long time. And if you let me keep going, I have a lot more to say on the topic. So you tell me,
And so we'll connect the thread as it relates to, Michael, the Renaissance man, into your investment banking career in just a moment. But I did want to touch upon, some of the things that we've observed over the last couple of weeks.
Yeah.
What's your perspective on what we've just experienced in the financial services space? And what does that foretell in terms of what we can expect in the weeks and months to come?
Exactly. So I have a great little spiel because I knew I would get some version of this question. So my kind of thoughts on this are that, outside of the Sun Tzu world, strategy, power, and the balance sheet, have always been connected, right? The original libraries and banks, right, held religious knowledge. That religious knowledge was deemed to be the source of the power of monarchs, right? And then wielding that power became the art of strategy, the art of war, whatever you want to call it, so on, so on. So I think the balance sheet is kind of, and metaphysics combined, that kind of is what strategy always has been. And my point in talking about granaries and religious libraries is that, stores of wealth necessitated lending, right? So there's interest rate data going back to Babylon. There's biblical interest rate data. I recall when I was a student, there was a 2,000-year-old data set across, all different global interest rates. It was put together by someone, another economic historian in Britain, and the general idea there is that, 20 years of effective flat or negative interest rates, especially in peacetime, is historically unprecedented. So I think there's a lot to that in general. And I found, because I knew that I would be the guy that, you might want to find an example. I found an example from 2,000 years ago. And it was at the beginning of the Roman Empire. The Emperor Augustus drove rates down significantly. That encouraged a lot of investment abroad. That was great. A low rate of interest and change always is a significant thing. And long run, without a lot of change, and then sudden change is always going to create pain. The second is that sometimes, governments or related entities can make decisions that maybe aren't fully in the best interest of the functioning of the market, and that can create pain that needs to be covered pretty quickly with the feeling of safety and the restoration of confidence. So I think there's something there. I think there was, in terms of speaking about real events, I think there was poor signaling early on, from the policymakers. I think that in some way led to the yield curve that we had, that then led to worse decisions. Because if you look at, I kind of got, you could hear a pin drop, in the virtual room last September when I was saying that, 7-8% rate in 2023 is possible. All you have to do is look at the 70s and say, okay, what was the trailing inflation rate and what did the Fed do about it? I mean, I have one kind of more thing to tie that to, which is kind of that's, let me pull it to this, right? Which is that, Hayek, the 20th century economist and philosopher, talked about, the business cycle and the end of the business cycle, not necessarily 20-year periods of easy money, but, you'd have people on an island, right? And they would have, still limited resources, but they would decide that they'd pool all their resources and build a machine to get them off the island, but they'd never finish building the machine because there was tightening or whatever. They ran out of coconuts, whatever. And so what, yeah, right. So what winds up happening, is that one, your quality of life wasn't good enough the whole time because you could have just been using those resources to be happier at the time. And two, you're never getting off the island, right? And that's the same question of what's going on now, which is, is there deposit insurance? Is this equity value going to be wiped out suddenly because there's a lack of profitability or there's a lack of deposits or whatever to back it up as these things are happening quickly? So I'll tie that back into the advisor thing really quickly, only to say that there's a war on generalism, and that's precisely the result of low interest rates pushing every decision to the margin. Hyper-specialization is a result of everything being pushed to the margin. And never in my life have I seen more title proliferation and so-called specialization than at an unprofitable VC-backed SaaS firm. Now, Taylorism, as I understand it, is measured in terms of labor productivity is measured in terms of profitability. And the software era has given us half the labor productivity of the hardware era and the next era, who knows what. So there's a lot changing.
One of the interesting observations from what we saw coming out of the Silicon Valley Bank episode in particular was that, of course, everybody understands that, a bank like SVB is ultimately accountable to the street as it relates to financial returns. And oftentimes it is the role of the regulator or of regulation to effectively put into place controls or risk controls that effectively compel an investment bank to ensure that it is applying the appropriate stress tests. It is interesting that, in a context where regulations are not necessarily going to be the defining factor for preventing a problem, that in the absence of executive leadership and a culture risk management, you're going to have these situations recur. And so my question for you kind of relates back to this culture of risk management, because it's clear that in the case of Silicon Valley Bank, that was lapse, that there was effectively not the appropriate controls that would have prevented the situation from occurring. And so my question for you is around, what have you observed as kind of organizational contexts which lead to situations where, an organization like Silicon Valley Bank is going to prioritize profit over immediate term profit over long-term sustainability through appropriate risk management?
Sure. And I think, I'll break that apart a little bit, only to say that I don't necessarily believe that Silicon Valley Bank, did that exactly in that way. I think that, they had a hard time adjusting to a new reality of the world. They were too slow. They failed to do that meaningfully, and they kind of got caught holding the bag, so to speak. I mean, I happen to think that it's more of a concentration issue in the banking system in general. That's only worsened since 2008. That's created these sort of situations where you have, essentially a handful of banks who have access to primary dealing, and the rest who have to deal with them. Now that creates, essentially a velocity of money issue within the upper limits of the financial system. So I happen to think that while, of course, and I'll speak to it in 1 second, there were risk and management issues here, 100%, and within their entire ecosystem, frankly, that I've been critical about for a while. But at the same time, I also think that there's also a lack of maybe the right Pareto optimality, in the banking system in terms of the flow of capital that got tightened recently that really, frankly, is no different than the Roman example that I gave. So, in terms of management, obviously, I think that the right incentives for the right people are very important. I think that, specialization, as I've said it, sometimes does lead to a separation, in governance that is ineffective, can become too much and lead to someone saying, well, that's just not my job. Even though the sign is flashing red at their desk, they're saying, well, I'll wait for Gary down the hall to see that. And because I'm still getting paid. So I think that a lack of collective incentivization for the well-being of the firm, or maybe for a broader set of, things that are at stake, is always important. I think that comp can be related to a lot of things. I was used early in my career, I set some sales comp, and, within the limits of legality, there were some playful and interesting things you can do with that to align people. I also took an entire account management team that had a $75 million research portfolio that they were renewing every year. And, I took them off commission, and our revenue retention went from like 102 to 106, just because people, actually had more of a feeling of well-being and safety. So does that apply to Wall Street every day? Not necessarily, but I think that we are more intelligent when we are using our general intelligence and our social intelligence, not just our narrow intelligence, which, by the way, AI is going to come in and do for us. Narrow intelligence is, if that's your job, see ya. General intelligence is here to stay, I think.
Yeah, that's so fascinating, and it's really great to see kind of how your mind works and how you're able to integrate kind of the things that you observe on the basis of larger societal trends as well as kind of events of the past. I'm sure you're familiar with this notion of kind of the cyclicality in historical events. It is fascinating to me how often we get caught up in these same patterns of behavior, because fundamentally, the Homo sapien hasn't evolved significantly over the course of the last several thousand years. And so in reality, technology might be advancing, but our biological makeup is really roughly the same as it's been. And so we end up falling into very similar patterns as human beings as it relates to how we interact with the events around us. But in any event, I did want to switch gears a little bit and talk about how all of this now has impacted the way that you have thought about the development of your own career, because you did found Ithron a little over 3 years ago, and you've had a really diverse early career in the financial world. I'd love for you to share for our listeners what characterized that path and the story arc of your own career, leading you into the investment banking world as now a licensed investment banker who has chosen to partner with Finalis for that aspect of your career.
Look, I grew up around Wall Street to some degree. I was, I probably read my first analyst reports before I was 15 years old. I went to a lot of conferences. I even, people were aware that I was a good judge of character. I had these kind of early internships where at first it was just photocopying stuff and this and that. And then I was going to go to the conference and take notes. And then it was, I'd say something about the CEO and they'd think like, how did this kid, have this perspective? So I started realizing that, you could kind of audit people based on the way they spoke and communicated and understand things. So very early on, I kind of got involved in that world. And, I had some connections too. So that was good. And like I said, the bear thing was very funny. That kind of sent me in another direction. So I started Ithron 3 years ago, but I've been consulting on this line of business for at least a decade. Although most of that time I was primarily at eMarketer, which is, as I said, kind of the primary research source for digital transformation, so on. Its original owner, Beehive Partners, which was a New York mostly B2B media VC, where I got pretty involved, and then we sold eMarketer to Axel Springer for $250 million in 2016. I was very involved in that, frankly. In fact, I had the only business plan that was more than a year old at that company because everybody else was in the advertising. So I was very involved in kind of repricing, changing the commercial plan. We basically went from a 13 to a 48% profit margin in about 3 years while still growing double digits on the top. Obviously a lot of people were involved in that, but, like I said, I was the only guy in Excel. I had a lot to do with the pricing and the communication and the rollout, both internally and externally. That led to me, or even before then, really, because now we're talking 2012, 13, I got very involved in the rollout of B2B SaaS, the West Coast scene coming to New York, which is why I have a lot of maybe soured things to say about that world. But, I was a speaker on change management at Dreamforce in like maybe 2014 or 2015. I worked with Gainsights, now a public company, on some of the earliest customer success initiatives in New York. I had some relationships at some generalist PE firms where I did some work. I once redesigned the logo for a company that guarded military black ops sites. That was not intentional at all. It just came up. So anyway, so 2020, we finished the integration of eMarketer with Insider. I was kind of the last of the old guard to go, at least from the operating management side of the table. And, I was looking to do another fund, actually, with, the old investors. And timing was really ridiculous in the first quarter of 2020, and that didn't work out. So I wound up pretty much on my own. I have a nice network of folks and we're still involved and doing stuff, but it didn't turn out in the thing I, had in my head for a few months leading up to that. But Ithron was always going to be this kind of, consulting hybrid model thing, and finding Finalis well enough into that was great. But since 2019, I've been working with a crypto unicorn called Chainalysis, and they were kind of the grown-ups in the room. They were working with law enforcement and stuff like that, and really tracking transactions. And that led to me being fairly sought after in the crypto world. I teamed up with a big IR agency called ICR to work with them on their crypto and digital asset mandates with their clients. So Playboy, which was the first kind of big NFT launch to hit public markets, I scripted all that stuff for CNBC, earnings calls, things like that, and I, look, I was reporting into a German public company. I went to Capital Markets Day. I knew about that stuff. I've been to a lot of investment conferences, but this was very quick, deep end. And it was a lot of fun. I worked across the consumer groups and also on a ton of new listings, some of which did not happen because the world started to fall apart very quickly in the first half of last year. That's when I got involved with Finalis because I hit my market again. Everyone said, well, now that you only talk to investors, Michael, why don't you introduce us to some? And I kind of needed to make that a little more legal. So that's what I did pretty quickly. And, now I'm here. So I'll stop there.
Well, I mean, it's just fascinating to see how you were able to kind of dovetail your experience at a place like Beehive now into Ithron. And what I wanted to dig into in a little bit more detail was specifically the types of transactions that you've been working on since you joined the Finalis platform.
Now, on the Finalis side, I still have some of my own media deals that I've now kind of brought into the platform. I've been involved in some med tech things that are pretty exciting. One also because that's pretty interesting at this point in the cycle. Also, I'm trying to get more involved in AI. I'm great on consumer and luxury, so I've been looking for things within a bit of a more of an element there. But we were talking about private placement stuff, and for me, I recently picked up the 79. So I'm really honestly most excited about getting back into what I really know very, very well, which is strategic M&A, and work around that primarily in media, recurring revenue, IP-based businesses. And I happened to be on the phone 2 years ago with a certain large PE firm. The very day the news broke, they just acquired Taylor Swift's portfolio. And I'm not a big Swiftie. My girlfriend might be, but I happened to, or at least was when she grew up. I don't know if she'd want me saying that long, but I was thinking I'm on the wrong side of the business because I was talking about a deal that admittedly was a bit boring compared to the music IP stuff. So I'd love to get more involved in that. I'm looking to, but generally, yeah, the industry sweet spot for me is media tech enabled, IP based. But I can go pretty broad and into consumer categories, and
It's an absolutely fascinating background and story into launching your own investment banking platform. And I have to ask you, because the experience of launching your own business, especially over the course of the last 3 years, is not for the faint-hearted. I'm just curious, what has this fraught period been like for you and impacted the experience of scaling Ithron?
Going back to 2020, it was a little bit weird, having to adjust. Look, I'm in the strategy game. Strategy is always how do you react to the newest information, or how do you plan in advance to have a plan that will withstand new information? So, I like to think that I'm more flexible than most. The crypto thing, obviously, it hit the work I was doing. It hit my income for 2020 pretty significantly, more from a professional exposure than investment exposure, frankly. But that was no fun. So I'm happy and lucky to say that personally I haven't been very affected. I'm stressed that the world is not a peaceful place. I would love it to be. But I've done okay. And then, the other thing I'll say, and this is both a challenge and an opportunity, is FINRA communications policies aside, which actually are reasonable, doing what I do, which is to see around corners. It's not an easy thing to communicate to people because, number one, I sometimes call myself a CEO whisperer. That's something you want whispered. you don't want somebody shouting on the corner that, something negative. And I'm not always negative, but I do try and prepare people because I think, one, that's the most opportunistic, and two, that's usually the most lucrative and ethical, is to be very well prepared. So there has been a challenge, particularly in me trying to find SaaS firms that I can advise on profitability and restructuring, by telling them that they're going to have to fire a lot of people before they had to fire a lot of people. Now, I don't find any pleasure in that, but I found that I maybe aggravated a few too many people by being a little too ahead of the curve, and in having to market my own services, there's a challenge there, particularly in a down period. So again, I'm turning more optimistic again, but there are always things that I would want to say to people at a high level and in a quiet tone, and that will always remain a bit of a challenge.
I want to just, Michael, if I may, I wanted to kind of ask you a little bit more about this notion of being a CEO whisperer. And one of the things that you mentioned in your website, which really resonated a lot with me, was this notion that, in addition to the investment banking advisory services that you provide, you also see Ithron as an investment and thought leadership platform, development for artists, athletes, and other public figures. I wanted to ask you specifically about that aspect of what I might refer to as your broader portfolio of activities through Ithron. And first of all, what is that all about? What is the nature of that type of kind of thought leadership that you provide? And to what groups, if you're able to share more specifically, or what types of groups are you extending that advice and thought leadership?
Generally speaking, right, it's common knowledge applies, right? Which is that, if you're able to help other people out, or you're able to kind of stay on the message, know what to say, when to say it, then, you're not going to be looking, oh, should we respond to this story or not? You're going to know what's natural to speak about, and you're going to have a nice cadence around that. Now, that's the corporate world. And so, on the individual side, it's different, because I think there's such an emphasis on wanting to take, essentially celebrity money and put it towards, things that are both wealth and it just lacks morality for me. So what I'm trying to do is essentially give people a platform where they can both get involved in the primary market, which I happen to have access to. If they're looking, if they have a really big structure, I can advise that big structure, right? Individuals, I'm not looking at people's mutual funds. It's more about, what do you want to say to the world? How do you want to execute on it? And what do you want to say about it? So I think it's very much a question of, where are these people's values? Is this idea that, stewardship is lacking, and the people who are giving these people advice, these are largely creative people, come from the heart. And I feel like they're getting advice that is not holistic. And I don't necessarily even mean that in a loosey-goosey way. I mean that it doesn't combine their financial objectives with their moral objectives, with their emotional and reputational and influential objectives. And my goal is to really get at that. Now, how am I going about that? I've always been a guru, mostly for better or worse in indie rock, but and film. I have and a few painters and authors, but I have a lot of friends who I've always kind of been a background influence to, and I have a lot of connections, in this world of IP. So I've been dealing with, and I was in the media and sports group at ICR previously, although I was still an external resource. So I have a lot of connections to talent agencies. I have a lot of connections directly into film and music. And, I'm really looking, to work with these folks a little bit more. Again, this is, newer as I, have more access to these markets, and I'm coming more from a corporate thought leadership and communications background. But the goal very much is to help people build a platform that will actually make an impact on the world in a serious way and align with, their feelings, basically.
And just on that point on collaboration, since you've joined the platform, you've no doubt heard of the Finalis Marketplace, which is an environment that Finalis has built to really bring about more syndication of deal flow among the investment bankers that are affiliated onto the Finalis platform. What opportunities do you see in that kind of syndication as a way to really grow the pie and not necessarily see the deal world as zero sum, but really an opportunity to grow revenue opportunities among independent investment bankers such as you and Ithron Advisors?
Yeah. So, I mean, look, when I first got on there, it was great to see the marketplace, right? It's a really good thing. I got to see what deals are out there, how they're trading, which helped me go, okay, look, as I said, I've been on the other side of the table. I have a pretty good idea of how to price things and how to go to market. But it was just helpful to see that in context and understand the market that I'm now in. So number one, that was great. Number two, just connecting with people right away. Everybody's very open to collaborating and getting involved. And I've done some of that, although I've, tried not to, have eyes bigger than my stomach and to kind of, do what I'm capable of and prove that and build from there. What I, again, that's all towards the placement side. What I'm more excited about is the collaborating on, investment bank. Not that I'm not excited about working on the placements, but, really involved collaborations on restructurings, on M&A mandates, on things like that, because, we're an investment bank here at Finale. Can I say that, right? It's at some level, we can make our own pods and, figure out how to approach these deals. And obviously there's a lot of talent and skill in the virtual building. So I'm really excited about that. And, my offering kind of scales, right? It's the whole private company life cycle, but I also do some really high level stuff for public companies if that is involved. And I'm also kind of a middleware, which is that I don't need to have a mandate for anything. You can actually reduce me to the space in between. Everybody else can do that, and I'll make sure everything is working and everything is flowing. And I prefer to have a little bit more sleeves rolled up than that, but I'm a systems guy. I like to get inside of it. So I think that, getting involved in the M&A mandates and restructuring mandates on the platform will be pretty exciting there. Yeah.
Obviously, with the arrival of ChatGPT and OpenAI, there's been a lot of conversations around how artificial intelligence is going to bring about a new wave of innovation across all sectors of the economy. But here I'm specifically focused on kind of the knowledge economy and investment banking. Be curious to get your perspective on what an innovation like AI might bring about with respect to the delivery of investment banking services and advisory.
I've used GPT a good deal in terms of just organizing, my notes and things like that. I found it very helpful. I don't really think it thinks, but I haven't seen the Pro 4 version yet. That I hear is incredibly impressive. Outside of these very broad things, right? What will it do for investment banking? Frankly, I hope my eclectic intelligence, my human intelligence is going to be better at telling that AI what to do than people who are in a very narrow lane and might be replaced by an AI one day. So, I am excited about it in the sense that I think it will bring back, if it takes over a lot of the quantitative work, it will bring back the qualitative work that's been missing for so long. But at the same time, I think it is the result of 20 years of hyper specialization, hyper narrowing, that this can even be achieved and we can call it this, because I'm not sure that it's capable of this level that we think it is. But I do think that we've reduced knowledge work so much that it's easy for it to take over from what knowledge work is today. I try to be excited about everything, but I try to think really, again, holistically and seriously about everything. And
Well, I think, Michael, that is a perfect note upon which to conclude our conversation. Just this notion that, perhaps these new tools are going to give us professionals the bandwidth to create more space for, some of these broader approaches or frameworks, whether that's philosophy, history, morality, and the like, that we started this conversation discussing. So it was a really illuminating conversation, and I can't tell you how thrilled we are to count on you and Ithron Advisors as partners alongside us here at Finalis. So very excited to have you on board, and Looking forward to continuing the conversation in the days ahead.
Thank you for everything, Fed. Really appreciate it.
Thank you. Finalis is a broker-dealer platform with everything that M&A advisors, investment bankers, and placement agents need to succeed. We deliver a broker-in-a-box regulatory affiliation solution, replete with tech-enabled compliance, research and analytics, deal lifecycle management tools, and a first-of-its-kind deal marketplace. Learn more at www.finalis.com. You've been listening to Pencils Down, a Finalis podcast. Keep connected with us by subscribing to the show on your favorite podcast player. If you like what you've heard, please rate the show. That helps us keep covering the latest in the private securities brokerage landscape. Thanks for listening. Until next time.